Okay, good evening, everyone. Welcome, team. I hope you can hear me. I was trying to wait for people to join in. So thank you so much for joining again our CPA training for MDC, paper 11. This is basically our second class. We have this paper every week, Saturday this time. Some of you might have gotten our timetable, and you might realize that we had some changes and put this paper in the evening rather than in the afternoon. So basically, I shared these notes to the students that have already subscribed to the paid classes. And if you've not yet gotten these notes at the end of the day, please reach out to me as you subscribe on the class. I'll be able to give you this. So if you receive these notes, you realize that I try to give some kind of summary guidance on what you really need to know, especially for MDC as a paper. Just roughly to run through, as you can see, we're basically drawing our knowledge from paper 2 and paper 7. And at the end of the day, you need to understand what is exactly there. Just to, yeah, this is just this we can easily pick up. Could you share on email as well? Yes, I'll share on email as well, team, if you have a challenge with accessing from where I've shared. So basically, what you need to really put in mind if you want to pass this paper is to do with syllabus coverage and understanding, of course, at least the learning outcomes, which are listed within the course outline or the syllabus. You also need to make sure that you do a lot of practice. Make sure that you look out for the past papers. Those are on the AUSPA website. Also, it's good for you to start early as possible. You can also interest yourself in the examiner's report, which you can also find on the AUSPA website. They try to do some reports for some papers. Revision, very true. Examination structure, yeah. Strengths and weaknesses, tiredness, reading all questions, yeah, time management, and so on. So that is just basically a summary. You try to go through and see what exactly you need. But for matters of this class, we want to dig deep into why we are here. If you remember on our course outline, we have an introduction, and our introduction basically rotates around the introduction to MDC. So it's what we want to dig deep into today to see what is really ahead of us. So MDC as a paper is basically preparing us to be management accountants, and the word management accountant will be really very common even as we proceed through this whole paper. So I know you must have heard about the word management accountants. Maybe some of you are working in organizations where you have management accountants. But just in case you've not heard, basically what management accountants do, they transform the financial accounting reports into information that can be understood by the non-finance managers. Why am I saying the non-finance managers? You know, in an organization, we don't only have finance managers and maybe accountants, but we have other people. It's like the CEO, like the sales manager, marketing manager, HR manager, etc. So what management accountants do is they transform the information that us accountants have prepared, as the financial accountants have prepared. For example, the balance sheets, the income statement, and we transform it into information that can be understood by the managers within the organization to make decisions on behalf of the business. You get it? So it's important for you to understand that. So reason why management accountants do all that is for matters of decision making. So it's important for you to have that in mind. Now, a bit different from what financial accountancy does, management accountancy has some kind of some differences that we also need to understand, because at the end of this lecture, you need to be able to distinguish what a management accountant does and what a finance accountant does. So one, the management accounting information is basically internal. By internal, I mean the information is consumed only by the people in the organization. And the reason why it's consumed by only people in the organization is because this information is designed to solve the business day-to-day, of course, problems, but as well as helping managers make the right decisions. So it is basically internal information. It's not like financial accounting, because with financial accounting, once these reports are prepared, once the reports are audited, this information is out there for outsiders to use. That is why you see that you prepare your financial statements and the bank will need that information. At one point in time, even maybe URA might need the same information. NEMA can also need the same information. You can also have cases where maybe creditors or your customers or debtors may also need this kind of information. So that's what the financial accounting information will do. But for the management accounting information, it's basically internal. It's mainly information that will be used by the managers in the organization. So it's very important for you to know. The other is, of course, it's confidential as well. Why it's confidential? Because you're trying to make decisions on, let's say, maybe how to enter a new market, maybe to purchasing a new equipment. So it's basically really confidential information. And then, of course, the other is that it's forward-looking. Those that have done financial accounting before, you agree with me that the balance sheets, the income statements that we prepare and so on, these are mainly trying to look at the past. The information they are using is the past information. And that's why we're saying instead of historical. So what happens with management accounting? For it, it's forward-looking because we are trying to look into the future. If we want to purchase a new asset, or maybe make an investment in a new kind of area, ours is to make sure that whatever investment we want to make, we are trying to make projections of how the future looks like. So that is why we are saying that for it is actually forward-looking. So it's very important for you to understand that. And of course, the other is computed reference to the needs of managers. A bit different to financial accounting. Financial accounting, we have what we call the reporting framework. By reporting framework here, I'm trying to mean we have the standards, the ISs, the IFRSs, and so on. Now, when we are preparing management accounts, in this case, we don't have to follow the standards, the IFRS, the reporting framework. Basically, we prepare management accounts depending on the needs of the managers available. And why we do on the needs of the managers is because every manager has a different decision they want to make. The sales department maybe wants to understand how the different maybe sales areas are working. If I'm working in MTN, I'm a sales manager, I want to know how the Kampala region is working in terms of our sales. I want to know how Alua is working, and so on. The HR manager will be looking at things like maybe how much are we spending in terms of payroll costs and so on. So that is why we are saying that it is different from the financial accounting, which focuses so much onto the financial accounting standards. So good for us to have that in mind. So we have a standard definition by the Chartered Institute of Management Accountants. This is standard, basically just trying to build onto our understanding. And they're saying that management accounting is the process of identification, measurement, accumulation, analysis, preparation, interpretation, and the communication of information used by management to plan and control within an entity and to ensure appropriate use of and accountability of its resources. So they are also saying it also comprises of the preparation of financial reports for NANI management groups such as shareholders, creditors, regulatory agencies, and tax authorities as well. This is what CIMA tries to define management accounting, just for our information to basically understand. You will not be asked to really define this according to CIMA. Basically, this is a professional paper. What we are minding on basically is your understanding of what management accountants basically do. So we also need to appreciate that management accounting also has certain kind of as key areas that it tries to follow. And one of the areas is strategic management. Then the other is performance management, and then risk management. I'll say if you have any question, you can use the chat box, and I request that all of us we mute our microphones so that we don't distract the class. So basically what we mean by strategic management, you know, I hope you've seen what we call, I'm going to show you as we proceed. It's like a management triangle. Strategic management is trying to look at the overview, a high level overview of where the organization is actually going. For example, strategic, if you're trying to speak about strategic management in an organization, the people you're referring to here are like the boards of directors, people at that kind of level who make decisions in terms of maybe expansion of the organization, maybe entering a new market, and so on. So management accountants play a key role on also providing key information to support management to make such key strategic decisions. And that's why we are saying that management accounting as a practice also extends to the area of strategic management. Then the other is performance management. Now, the word performance, of course, on a day-to-day basis, we have people like employees in the organization. Now, not only the employees, but we also, when we're speaking about performance, we also bring in the idea of, let's say, divisions here, like branches or business units. Now, on a day-to-day basis, continuous management wants to understand how each, say, employee is performing and being able to measure their performance. And this is where we shall try to, when we go ahead, you get to realize that performance management itself is a topic on its own, where we're trying to measure the performance of managers of, let's say, business units, as well as measuring performance of divisions like branches. So management accountants also support in this area, ensuring that, of course, decision making in regards to performance management, as well as managing performance of the organization, is concerned. So by performance management, we're trying to look at how the business is, of course, is operating in terms of its staff, as well as maybe its branches, and the kind of value that they are bringing in. So being able to measure that performance, the management accountants, of course, provides information in terms of maybe how much profit each of the division could be making, or if it is maybe staff, if they are sales representatives, in terms of how much revenue each of those staff could be bringing in. So it's very important for us to understand. And then the other is the aspect of risk management. The aspect of risk management. Now, risk is to do with, of course, uncertainty, us not knowing how the future might look like. So what we are saying is that management accounting does not only stop at strategic management or performance management, but it also goes ahead in helping the organization manage its risk. And this goes ahead in areas of being able to identify. By identifying means that here we are going in a wrong direction. If, for example, a given business unit or branch already by their results for a given month, they are showing that for consecutively for the last 5 months, this branch has been making losses. Already that is a risk that you, as a management accountant, you've been able to pick up. So there's an identification and then measurement. Now, by measurement, we mean, it's not about us going ahead to identify the risk. We should be able to measure to what extent will it affect the organization. So it's important for us to understand that. So as management accountants, we identify, measure, manage, and report. By managing risk means either we are recommending things like maybe insurance, we are recommending things like maybe management doing away with maybe a given branch. When it is to do with risk, there are different ways of managing risk. It could be one to maybe transfer the risk to another person, which is through insurance, or it could be you making a decision of not going in a given area. When if management realizes there is risk in a given area, for example, if you want to expand our operations into South Sudan, and as a management accountant, you're able to provide to management, of course, you identify the risk that is there, maybe political risks, being able to measure on how that will affect our operation. You could go ahead to recommend to management that we actually rather not go to South Sudan than actually going there. So we'll try to look at that when we get to risk and uncertainties, one of the topics that we shall get down. But this is an introduction just to give you insights. In case you're following this class, make sure that you at least have a pen and a paper and the notebook, so you're able to note some of the things that I'm indicating. Some of the things may not be within the handout. At the end of the day, when you hear me speak, you're able to note some of the things and they help you understand some of these concepts. Because at the end of the day, you don't have to cram these things, because once the examiner sets you and says maybe give maybe three areas into which management accountants extends or something like that, you don't have to cram this and put everything that is there. You need to understand when somebody speaks of strategic management, what comes to your mind, what exactly is it, and what kind of example can you give in that relation? It's a professional paper and you expected to be able to give practical examples onto what exactly is happening. So that is very, very important for you to have in mind. Okay. So I just tried to put a summary here of what I just tried to differentiate earlier on, differentiating between management accounting and financial accounting. Yeah, somebody can try to ask you this. Basically, this is just to help you understand how to distinguish two, just to run through. Of course, the users, we said management accounting, these are internal users. Financial accounting, this is more focused on external users. And then, of course, function, what basically management accounting is trying to do, we are trying to help, of course, management be able to make decisions about the organization. And then financial accounting, of course, is trying to provide a record of the performance of how the organization has performed. That is why we are trying to look at if we are preparing a statement of or a statement of maybe position for the organization, ours is to look at maybe what has happened, what kind of assets have we bought, and so on. And then we're able to present that. Legal requirement, there's actually no legal requirement for you to prepare management accounts. You get it? Eh? So it's very important for you to understand. To those that just joined us, I clearly indicated that the management accounts, basically, the reason why we are speaking more of them, especially in this paper, which is management decision and control, is because as accountants, we prepare the financial, of course, as financial accountants, we prepare the financial accounts, but then the financial accounts sometimes don't give information that is required by, let's say, the finance managers, because they want to know what does that profit mean? What does that fixed asset being at that value mean? So the management accountants come and build on that information. So there's no legal requirement. Basically, it's basically internal. No one will ask you, please share with us your management accounts, because this is confidential information and it's within the organization. Although for financial accounting, by practice, the law says you should prepare these financial accounts. And that is why you've seen some organizations or some companies go ahead to even publish their financial statements in the newspapers because of that requirement. So yeah, these others you can try to read through in terms of nature of information. Basically, management accounting is will be both quantitative and qualitative, and that's the same thing of monetary and non-monetary. Now, financial accounting, mostly you'll find information in monetary terms. You get it? Eh? Yeah, types of information. Management accounting will provide to you historical, intermediate, and maybe future planning. The reason why management accounting will provide you such information is because if management maybe wants to let's maybe purchase a given kind of asset, the management accountant, you may provide information on how the company is operating right now, maybe from the financial results of the previous maybe financial period. You're also able to provide maybe after implementation of the machinery within 6 months, what would that bring? And then maybe you can also go ahead to even provide information into the future, maybe within the next 2-3 years, how would that impact to the organization? You get it? So that's what you're doing as a management accountant. Well, for financial accounting, we know very well that ours is to look at, if we are preparing financial statements, statement of comprehensive income for a company ABC, ours is to look at the previous financial year. If we are preparing, for year ended maybe 30th June, ours is to look at the financial records for that period. We shall not go into things to do with the future. You get it? So it's important for you to have that in mind. You get it? Huh? So all these reporting framework already indicated that financial accounting bases on standards. Well, there is no really strict rules when it comes to management accounts. And then format, basically management accounts, they really don't have a given format. And the reason why they don't have a given format, still to repeat myself, is because, you know, if a sales manager is interested in given information, theirs will be specific to them. The same thing with the marketing manager, the same thing with HR manager. Basically, you always find that the information that each of those need is a bit different from the other. So it is very important for you to have in mind. So these are several. You can come across different other differences. But what I want to just tell you is that understand the difference between the two. What is management accounting and what is financial accounting? When you understand the two, then you're able to easily provide the differences with much ease. So it's very important for you to have that in mind. So any question? Any question? If you have any question, please use the chat box to ask. Guys,
can't hear you.
Just give me some minutes. I'm trying to sort out something here small. Yeah, just a few minutes. I'm going to resume.
Kale tugenda kukwata Spain.
Okay, some people are saying they are not hearing in the chat box here. I was trying to sort out something small here. Yeah, but I tried to take you through the differences. I hope those are okay now. I didn't get any question in relation to that. So I beg to proceed. Basically, we are now jumping into the roles of what a management accountant does. Now, the first role is the role around planning. Now, why planning is because, you know, every organization does a plan, just like the way you plan as an individual. So organizations have what we call strategic plans. They also have operational plans. They also have annual plans. Now, what a management accountant does is supports this process. You know, you don't just end up on drawing plans on paper and that is all, but these plans have to be transformed also quantitatively. So what happens is here is management accountants support on the aspect of transforming, especially around budgeting. So management accountants are very key in this area of budgeting. So we go ahead to provide information around pricing, provide information around capital expenditure projects, around product costs, and so on. So management accountants support that whole process of planning. Some of you who are working in organizations that have management accountants, or if you're a finance person and you do some management accountant work, you get to realize that on a day-to-day basis, it's the management accountants that are in charge of the aspect of budgeting. So it's very key for us to have that in mind. Then we have the controlling. Now, By controlling, what we mean by controlling is just like the way you're driving. If you're driving on the road, yours is to make sure that you don't get off the road. So what happens is in business, management accountants help management to make sure that their plans turn into actual results. The plans turn into actual results. So on a monthly basis, on a quarterly basis, they provide information that supports management to understand either they are performing as per plan or they're actually diverting. And that's what the performance reports basically do. So it's very important for us to know that any organization wants to make sure that its plan fits into its actual results. If you've planned, for example, to maybe make over $1 billion in revenue, and maybe this billion gets down into maybe 100 million, maybe per month, the management accountant will provide information to management on a monthly basis. If, for example, our monthly target is 100 million, and we are maybe making, let's say, maybe 50 million, that will appear within the performance management. So management is able to make any maybe changes, maybe rectifying any reasons why we are having the variances. Maybe because we may have the variances, maybe because a given either branch is actually letting us down, or maybe we've not implemented a given plan that will give us the other 50 million. So it's very important for us to have that in mind. Then the other is the organizing. Now, every time you hear about the word organizing, here we're trying to speak about the organizational structure. So the management accountants help us in having a very tailored organization structure that fits within the organization. And what do I mean by this? You know, because as management accountants, we go ahead to dig down and understand some of the cost structure of the organization. We also get down onto the employees in terms of how much are we spending on each of, let's say, the employees. So at the end of the day, we are able to provide management with a suggested optimal organizational structure that will help achieve the objectives of the organization. So that is how the aspect of organizing comes in. Then motivating. Now, how the motivating comes in is that the management accountants, because we provide information on, let's say, on a monthly basis or maybe a quarterly basis, even on a weekly basis, that information helps the employees to know how far they are progressing on, let's say, on their targets. And I want to tell you that as an employee, when you're aware of how you're progressing on your targets, for example, if maybe are you a salesperson and they give you your target of, let's say, maybe to sell maybe units worth maybe 5 million every month. Now, as a salesperson, if somebody is providing you information on how you're progressing, let's say maybe somebody's saying, okay, this month you've sold 6 million. The other month you've sold maybe 7 million. This month you've sold maybe 6.5 million. There's an aspect of motivation because you know that you can easily know what exactly your effort is bringing in. So that is why we are bringing the aspect of motivation. The same thing with even, let's say, branch managers and so on. When branches know how much they're actually bringing towards the overall maybe profit of the organization, then it motivates them. It creates that motivation. So access to information is a motivating factor to staff because they get to know how they are progressing on their day-to-day targets. So management accountants also play a key role in that aspect. And then the other is the decision making. Now, as we've been talking about what management accountants do, one of the things we've said that they provide information to management on a day-to-day basis to support management make decisions. So when management is making decisions, the management accountants, for you provide this data on which management will base to actually make decisions. Because management is not going to make decisions out of just maybe intuition or out of their feelings. You're providing to them and telling them, when we take this loan, this is the kind of interest that we shall be charged. But if we actually take on this equity, this will be the dividends we shall be able to pay to the equity holders or the shareholders. So at the end of the day, you're providing management with information that will help them make the right decisions. So it's very important. So controlling, organizing, motivating, and decision making are very, very key for us to understand as roles of management accountants. So still within the introduction, it's good for us to appreciate the aspect of management accounting and ethical behavior. Now, why this is very key is because as management accountants, we don't work in a vacuum. Basically, we have key principles that we have to uphold. And some of the principles that we have to uphold, as you can see here, one of the principles is the principle of integrity. Now, these are common. You might have come across this maybe in financial accounting. Not any different, even here, these principles are also key. And the reason why they are very key is, as a management accountant, on the information you're providing to management is being used to make critical decisions. Some of these decisions are costing a lot to the organization. So at the end of the day, organization or management has to have that confidence, has to make sure that you also upholding a high level of ethical behavior. So you have to make sure that you're being honest and not being a party to any falsification. In this case, I'll give you an example. If you're advising management to, let's say, borrow money from a given bank and say, let's borrow money from Stanbic instead of Standard Chartered Bank, your decision should not be influenced because maybe you have a cousin who works as a loan officer in one of these banks. It should be because when you make the evaluation quantitatively and qualitatively, one bank is better than the other. You get it, huh? So it's very important for us to have that in mind. Then the other is the aspect of objectivity. Objectivity here, we're trying to say that you're not biased or prejudiced. Very similar to the aspect of integrity. Objectivity, you're making basically decisions that don't have any side. You're not making a decision because maybe you're biased to maybe a given supplier or a given customer. Your decisions are objective. And then the other is confidentiality. Confidentiality, making sure that all the information you get access to as a management accountant, it remains with high levels of confidentiality. So it's very important for us to have that in mind. And then the professional competence and due care. Here we are trying to say that as a management accountant, over time, you continuously develop your professional expertise, as well as also being able to be honest on certain key areas. For example, if you're making advice on a given area where you don't feel you have competence on, being honest and letting management about it demonstrates professional due and care and competence to management in that capacity. Then the other is the compliance with relevant laws and regulations. Now we have key laws that we base on, for example, the Ugandan laws, like maybe laws around tax, maybe the Income Tax Act and so on. Could be maybe laws around maybe environment, maybe Environmental Act, whatever law is relevant to that decision that you're supporting management make a key decision on, then you know very well that you have to make sure that it's compliant. There's no you're not being fraudulent. You're not basically doing something that is contrary with the normal practice or with the normal laws and regulations. You get it, huh? So it is very important for us to have that in mind. Yeah. So when you look at our course outline for MDC, one of the other key things that we also need to look at is the aspect of the behavioral aspects of management accounting. Basically, we're trying to see how should management accountants be able to behave within the organization. Now, we have a key area where management accountants, of course, as management accountants, we are the champions for aspects of cost control and reduction. The aspect of cost control and reduction, and basically here, because we have access to information on a day-to-day basis, and we are making analysis in regards to how much we budgeted and how much we've, let's say, maybe spent. We have to make sure that continuously ours is to make sure that we are controlling costs as well as doing any kind of reduction. Now, as we do this, of course, we are not working in a vacuum. We are working with different other staff within the organization. So with that in mind, ours is to make sure that we're trying to develop this kind of culture within the organization that, yes, we have to make sure that cost control is key for everyone within the organization. So that's why the behavioral aspect is coming in. So we have to be drivers of culture that is around controlling costs, as well as, of course, supporting management, make the day-to-day decisions also around costs. So it's very important for us as management accountants to understand that we don't work alone, but we work with different other people. So we should be champions of building this kind of culture that is around reducing costs, as well as, of course, not as well as ensuring that we are doing things like maybe collaboration within the organization, communication, culture, and care, which is demonstrated by the 5 C's framework. You get it? So just for you to have that in mind. Yeah, so these are just key insights from the behavioral aspects. Basically, the aspect of minimizing costs, and then also ensuring that we are also playing a key role in ensuring that all aspects of costs are effectively planned, controlled, and continuously assessed. Yeah, and then the other key role when it comes to planning and control systems, we said the key roles of management accountants, one was to do with planning and the other was to do around control. So under the behavioral aspect, we have to make sure that we continuously set up systems that support management to do plan and control aspects of costs on a day-to-day basis, as well as making sure that, of course, we are holding management responsible for any kind of costs. Yeah, so that is very, very key. So the other part that I also want to emphasize tonight is the aspect of management information and communication. Now, we are still trying to dig down into the introduction of management decision and control. Now, why management information and communication is very key as part of our introduction is because management accountants, from the definitions as we saw, on a day-to-day basis, we are providing information to management. And this information is actually through communication, because we communicate to management. Now, why the aspect of information and communication is very key is because we have to make sure that we understand what is information. Like, you'll get to realize that what is information to me as the finance manager may not be information to the sales manager. Something is information if somebody can actually make a decision out of that you've given to them. So that will be information to them. So as management accountants, we have to understand that what kind of information does the HR manager need, and how do we craft that kind of maybe data and transform it in information that can be best understood by the HR manager. So, and then the aspect of communication, we are going to also understand that within the organization, we have different communication levels. We have the strategic level, we have the tactical level, and then we have the operation level. So we shall try to understand what kind of information should be provided to a given level as we proceed. So you must have heard about the definition of information, that information is actually transformed data. Information is transformed data. Basically, data is just like a transaction listing or a general ledger. That could be maybe something complicated for people who have not practiced, but data is just like saying that maybe we sold to customer A, we sold to customer B, we sold to the other customer, and so on. Maybe you have a list of sales to given customers. Now, information is when you make an analysis out of those sales and say, maybe of our total sales, we've been able to make maybe 20% to corporate customers, 30% to retailers, maybe the other percentage to wholesalers. In that capacity, that kind of information is information that maybe the sales manager can basically make decisions on, and maybe to understand which sales maybe area should we focus on as an organization. So it's important for you to understand that there is data and then there is information when it comes to your role as a management accountant. Yeah. So data is basically raw, and we are calling them the unorganized facts. Basically, they could be a sales report, it could be a purchase report, and so on, but you've not yet done analysis and put it in a way that is simple and maybe easily understood by the person who is going to use this kind of information. So we have key features of useful management information. So information should have certain key X-sticks, and some of these X-sticks could come from this acronym of ACHULATE. ACHULATE, by ACHULATE, I think some of you might have come across this. Basically, here what I'm trying to mean is that information should be ACHULATE. It should be error-free. When you provide to me information about a sales report, when I see 20% for given maybe a given sales unit, maybe retailers or wholesalers and so on, it should be information that doesn't have any error in it. So it's important for us to understand that any information to be useful has to be accurate. And then the other is the timeliness. Information should be provided to managers as and when they need it. You should not, if I need information today to make a decision, maybe a purchase of a fixed asset, you should not again provide me this information after 6 months, because after 6 months, I will not actually be interested in this information. So it's very important for us to understand that. And then we have the aspect of relevancy. Now, by relevancy, we are trying to mean information should be relevant to the decision that I want to make. If, for example, I want to expand, you should provide to me information about that market that I want to expand to, not again about something that is totally different. You get it? Eh? So it's very important for us to have that in mind. Okay, so we proceed. So relevant, it should basically, information should be really relevant and to the given situation. If the CEO wants to maybe understand how a given maybe sales team is working or a given branch is working and so on, that information should actually be in that line. Yeah, so you can think of many other, just barely sufficient, worth its cost. Now, I want to emphasize something when it comes to worth its cost. Now, information, of course, is not free, but it should be cost effective. Management should not spend more on getting certain information than the value it will actually get out of a given information. You get it, huh? So it's very important for you to have that in mind when you're providing information to management. At the end of the day, the value that management will get from a given information should not be less than the cost of getting the information. And that is why sometimes when you're advising management of, let's say, maybe hiring a consultant to do a given analysis on maybe a certain situation, you should make sure that when you balance the two things in terms of what value those people are going to bring and what you're going to get out of that decision, ideally, the value that you're going to get out of a certain kind of information should be more than the cost that you're going to incur on getting that information. Yeah, so these are the different levels of communication I talked about: the strategic level, tactical level, and operations level. So I say that as a management accountant, you need to understand that there are different people at these different levels. There are different people at the strategic level, there are different people at tactical level, and then there are different people at operations level. And the information that you also provide on some of the different levels should match the needs of the different levels. Now, operations level, these are people who are interested in information on a day-to-day basis. This could be like maybe information about the daily production, could be information around the daily sales, and so on. Now, when it comes to tactical level, these are usually managers who are interested in information that is to do with, let's say, maybe around how are we performing against maybe our monthly target, how are we performing against maybe maybe in terms of which branch is performing better than the other. So tactical level is a bit managerial in nature, and this is management. This could be the CEO could also be in this level as well. Now, when it comes to strategic level, this is where the board lies. Now, the board, because the board is looking at key decisions around of, let's say, maybe markets, maybe expansion, maybe discontinuation of a given plant and so on. So as a management accountant, you know very well that you don't provide strategic information to people that are at operational level, because people at operational level, for them, the information they need is just day-to-day running of the business. Also, when for example, we have like a board meeting going on, as the management accountant, you're not providing information to strategic at strategic level, information to do with the day-to-day production, because to them that is not information, that is actually data to them. So it's important for us to understand this structure to be able to provide the relevant information as and when needed. You get it, huh? So it's very important for us to have that in mind. Yeah, so here I just try to break down what I've just tried to explain. What is operational information? Like you can see, I've said day-to-day operation is the key aspect here, and then tactical, we are saying that this is for the middle level managers. You get it, huh? And then when it comes to strategic level, of course, these are like the electors that are making decisions around long-term needs of the organizations and so on. So it's good for you to have in mind. So as there are different levels, we're also providing information that matches those different levels. Yeah. So the other that I also want to clearly speak about is the decision-making process. As part of our introduction, it's good for us to understand the decision-making process. You know, the paper we are studying is management decision and control. So we should understand what the decision-making process is for us to make sure that we are providing information even across the whole decision-making process rightly as it's needed by the managers that are making these decisions. So I know you've made decisions before in life. For example, you might have made a decision to do this paper. Now, there could be different reasons why you actually chose to do this paper. So just reflecting on the process that you went through to actually make the decisions around this paper should be part of your reflections on what organizations go through to actually make decisions around this around different challenges that they might have. Now, of course, we also don't just make decisions around only problems. Sometimes you can make decisions around opportunities. For example, if, for example, you want to enter a new market, it's like an opportunity to the organization. So when we are trying to look at, if I'm saying identifying the problem, that can also maybe identifying the opportunity. You get it, huh? Yeah. Now, from the illustration here, after we've identified the problem, we now analyze the problem, try to understand what is exactly it. If it's an opportunity, we get down to understand what is the opportunity really about. You get it, huh? So it is very important for us to have that in mind. Now, after we've analyzed the problem or the opportunity at hand, ours is to now to develop alternative solutions. We go ahead to develop alternative solutions. Now, you get to realize that there are different ways of killing a rat. So here we're trying to say that management should not be restricted on just a single method or a single alternative. So we should be able to develop different alternatives that will be able to solve the given problem. Now, before we can select the best alternative, one of the things that I want you to know, the key step that was not demonstrated in there is the aspect of collecting data on the alternative courses of action. Now, before you really select the best solution, you should get all the information around the different alternatives. I'll give you an example. If, for example, you want to increase sales in maybe for your company, there are different ways of increasing sales. It could either maybe to let's say maybe advertise. It could be maybe either to hire more salespeople. It could be either maybe to expand to a new market. There could be different alternatives that you could. But as a business, you should be able to get different data around each of those decisions. If I expand to another market, in terms of my revenue, what would that bring? If, for example, I hire more salespeople, what would that bring to me as an individual? If, for example, let's advertise, what kind of impact would that affect my revenue? So it's very important for you to collect information on each of the alternatives before you can move to selection of the best idea. Of course, once you've collected information and data on each of the alternatives, you should be able to now make what we call an informed decision. You should be able to make an informed decision on to which option will actually best fit the organization. And that is where the selecting the best solution would come in. You get it, huh? So it is very important for you to have that in mind. Now, when we've selected, of course, it does not end on selecting. I know you might have made some decisions in life, and you say maybe this year I'll start maybe saving, or this year I'll start maybe this course, or this year I'll do this, and it only ends on the decision. So what we are saying is that that decision should be transformed into an action. And that is where some other people will call implementation. So after selection of the best solution or the best alternative, you then go ahead to convert that into action. You get it? Huh? So it's important step in there. And then after we've converted, of course, the decision into action, there's what we call follow-up of taken action. Now, this other people might call evaluation, monitoring and evaluation of the decision. Now, you don't only implement the decision, but you should make sure that you're evaluating on a day-to-day basis to know whether the decision that you made matches your planned outcomes. So, you know, on a day-to-day basis, for example, if the company made a decision to, let's say, hire sales representatives, maybe we had maybe around 50, and we said, since we want to double our revenue, we shall also double the number of sales representatives. So it's important for you to understand that if that is the case, then you have to continuously measure and understand, are we making progress? If you hired another 50 sales representatives, are they bringing in the same revenue as the other 50 representatives we are bringing in? You get it? At the end of the day, you're able to, this is what we are calling the control, even as we were trying to discuss earlier on. By control, we are trying to understand our plan is here. What are actual results? And what are we getting from the two, our plan and the actual results? You get it? So, and where we have any variances, of course, corrective action can be taken on. So it's important for you to understand the whole decision-making process, that it's not just as waking up and making the decision, but rather we have to first go ahead to identify the problem, which problem can also be an opportunity. And then we get down into really understanding the problem. We identify the problem and then understand it. And once we've understood, we now collect, of course, get the different alternatives that will help us solve this problem. And after we've gotten all this kind of information on the different alternatives, that will help us solve this problem, then we go ahead to select the best alternative. And does not only end on selecting the best alternative, but we go ahead to implement this alternative. And after we've implemented, ours is to make sure that we are monitoring and evaluating to make sure that the planned outcomes are matching the actual outcomes. And where there's any divergence, we are actually making any kind of corrective actions. You get it? Huh? So it is very important for us to have that in mind, even as we proceed through. You get it? Huh? So before I proceed, we have people are on and off, but I just want to communicate that if you're part of this, and let's say you've not yet subscribed to our paid classes, I would really encourage you, because going forward, you'll not be able to access some of the classes. So we usually have these classes on Saturday, and we have a timetable that we passed around. So wherever you got this link, you must have seen our timetable. So I encourage you to join. In case you maybe you are doing some papers on level 1, and then you are progressing on level 2, it's good for you. It's a good progress for you. to take on paper like MDC. In case you did this paper and maybe you're prepared, you're just trying to do revision here and there, we have a revision program, specific revision program that you can join, where we do question and answer. Basically, if you're fresh, you've never done this paper before, or you've done it and you failed and you want to master it now, this is the right way to do it, to make sure that you attend these normal classes as we proceed. Yeah. So I would just want to try to give you some explanation here around decision making as a key element in the area of planning and controlling. Now, by now we should have understood planning. Planning, basically, you're trying to look into the future and set goals, set objectives, see where do you want to go and what exactly are you going to do to actually get there. So what happens is, when, for example, we are making a decision on to maybe our production plan, we also have, of course, different kind of process that we have to go through, just like we've seen the decision-making process. So even at planning level, we also have some kind of decision-making process that we have to actually go through. For example, is an example here of a factory manager. A factory manager can initiate a supplier evaluation program to identify and select suppliers who are willing and able to supply zero defect materials. So what we are saying here is decision-making process is not only, let's say, maybe at the final stage, but even at planning level, we make several decisions on to how we are going to work, how we are going to make sure that we attain the goals and objectives of the organization. So, like, for example, we are seeing an example here. The first example is us making sure that we are evaluating our suppliers to make sure that we are getting the best. So, as you can see, the problem here is maybe getting the best supplier, and then alternatives, we are getting different suppliers and asking them maybe to send us quotations and send us maybe any previous experience certificates and so on. From there, we are able to make decisions on which supplier to actually go on with. And even these suppliers, we don't only make a decision, but we go ahead to implement, maybe send them an LPO. We go ahead to do things like evaluate and see the contract we've given them, are they giving us what we actually ask them to provide? So it's important for us to have that in mind, that decision making is also at the planning level. Now, also at controlling level, if you've also been following very critically, we say that controlling, here we're trying to make sure that our plan becomes the actual. Our plan becomes the actual. And we say that management accountants on a day-to-day basis look at the information, look at how the organization is performing, look at all those performance reports, and are able to provide certain kind of information to management on whether the organization is on the right track or not on the right track. Now, as they provide that kind of information, it's like feedback. Management can make key decisions in that process, and those decisions would either maybe to continue with the way they are working, or maybe to adopt another way of doing things. It could be maybe to maybe to stop what they are doing and maybe do something totally new. You get it? So around there is also an element of decision making. So decision making process also, here we're trying to look at the relationship between decision making with planning and the control process as well. You get it? Huh? Yeah. So decision making process is very key, and it works very well with planning and controlling. You get it, huh? So it's very important for us to have that in mind. So basically, this is really theory, and you just have to listen through and try to take note some of these things. Yeah, they can ask you some of these things. Definitely, whatever is in the course outline, the examiner expects you to make sure that at least you've tried to study it and understand it. Like I said, some of these things you don't really have to cram, but rather you have to make sure that you understand them even as we study. You get it, huh? So it's important for you to have that in mind. Just want to show something here. Just a moment. Okay. Somebody says that some light on the value of information. Now, I think when I talked of value of information, here I was talking about the cost effectiveness of information. And what I said here, I say that information should be cost effective in a way that it should not be expensive to actually access certain kind of information. The value that we are getting out of certain kind of information should supersede the cost that we're actually incurring in getting certain kind of information. You get it, huh? For example, if we are trying to look at maybe a given market, or there's a given contract that we are trying to aspire for, and we're trying to understand more about that contract, and maybe we have to hire a consultant to actually support us onto getting that contract, or giving us more information, analysis on whether we should take on the contract or not. Ideally, let's say how much the consultant should charge us should not really exceed the profit that we are going to get from that specific contract. So that is where the aspect of value comes in. So it's important for us to make sure that information, one of the key ethics as we provide information to management, or as we propose different sources of information, it should not be expensive vis-a-vis how much management is actually going to get out of that information. You get it, huh? So it is very important for us to have that in mind. So I'm just trying to give you an insight onto some of our discussions here. So as you can see, these are some of the elements that we are trying to discuss: meaning of management accounting, management decision process, which we've just gone through, the roles of management accounting in the management decision process. We've tried to look at different roles. We looked at planning, control, motivating, and then decision making itself. You get it. Then we have key aspects: behavioral, organizational, and social aspects of management accounting. Is I try to explain somehow. And then the ethical responsibility of management accounting, as we saw aspects to do with integrity, objectivity, professional due and care and competency, and so on. You get it, huh? Yeah. And then the management information and communication, which we also went through to understand key ethics of information and communication. So these are basically to help us understand some of these concepts. and see how we can relate what we know with what the examiner expects us to know. You get it, huh? So that is an insight onto the introduction. As you can see, it is very short, and that's why we didn't take a lot of time on it. I provided notes to those that are on the paid program. So if you want to join our program, you can yeah, you pay 50% and you can join our paid program to be able to access the next classes going forward. I only shared this link today with the rest of the students because we made a change in our timetable. So I just wanted to pass on such information to them even as we proceed through. You get it, huh? So that's how our introduction looks like. These questions can be examinable. The examiner can set anything around there. So you have to make sure that you understand things in and out and don't cram. Like I said, you just have to understand some of these things. When the examiner brings it, you should be able to relate what you've studied with what it could be happening maybe in the workplace, because that is what the examiner is trying to look at. They're trying to make sure that you have this information on your hand tips and you don't have to cram some of these things. You get it, huh? Yeah, so it's important for us to have that in mind. So I don't know, do we have any question? Any other question apart from the one that was asked by Henry? So if we don't have any other question, maybe I would call it a day, so you can be able to go and concentrate on other things. If you want to know more about how to join the classes, please reach out to me and I will be able to give you more information. We also share this information on the WhatsApp group, so you can always find it. Yeah, this is a paper that if you concentrate very well, doesn't really have lots of things. And when you do a good practice, it's a paper that you can really pass without any much issues. So I really hope that that is something that you can really have in mind. Just needs concentration and making sure that you understand the concepts and not cram, because once the questions are set, some of these questions will be able to will be basically set using the course outline. You get it, huh? So it's that's very, very important for you to have in mind. So I'll share with you the questions, some of the questions that can be set around the introduction. I'll share with you these on the WhatsApp so that you can use them when you're reading, and then more clarifications I can provide those to you in case you have any challenges. You get it, huh? Yeah. So for now, yeah, thank you so much, everyone, for turning up. I'll be able to, yeah, we'll be able to continuously share more information. In case you have anything else, any challenge, please let's continue the conversation on the WhatsApp group and see how we can help you. So today I will end the class earlier on because of this is an introduction, but going forward, our class shall be ending at 9. And I really request that you plan very well so that you come exactly at 7 so we can start, so I don't have to wait for long. Yeah. So for now, I want to say thank you so much and I wish you all the best. Bye-bye.